So guys, I just got a new camera tonight, and I'm trying it out. It's got a lot of buttons and settings on it, and I'm seeing how it works. I'm hoping that the audio quality is going to be good, because that's the big reason why I bought this particular camera. And I hope the visuals is good too. So anyway, we're going to talk about silver tonight. And today they smashed silver. It was quite a heavy smash too, you know, because the price is already down low. It's near mining production cost. What we're going to talk about first is we're going to talk about how J.P. Morgan holds quite a bit of silver. Let's just take a look here. Let's open the charts right here. And the first thing we're going to take a look at is J.P. Morgan. Now, in this article from Gold Silver, it says J.P. Morgan now holds 700 million ounces of physical silver. That's a lot. The question is, do I believe that they actually hold 700 million ounces? Well, maybe they do, but I'm thinking, from other charts I've seen and stuff, I'm thinking that it's probably more like 150 million ounces. But still, a vast holding of physical silver J.P. Morgan has. Now, here's the thing, guys. Guys like J.P. Morgan do not accumulate and hold something long term and go long for this long. That means they have to warehouse it. They have to hire security guards to guard the warehouse. They have to buy in at probably a lot of it. They've bought in around $20 or so, because this accumulation took a long time. Maybe some of it they paid more than $20 an ounce for. They've been buying for a long time and holding it, and it costs a lot. They're not going to do that. I'm just going to tell you guys right up front. They are not going to do that unless they make a substantial profit, unless they know something that we don't know. J.P. Morgan knows something that we don't know. And that's why he's accumulating. The bankers are also accumulating. They're telling us not to buy, J.P. Morgan specifically, telling us not to buy cryptocurrencies, yet they're buying up positions of cryptocurrencies. They know. They know. And they're not in the business of losing money. They're always one step ahead of the game. Now, let's take a look here at silver mining production worldwide. And why this is interesting is because we saw an increase all the way from 2005. We saw it kept increasing all the way up. And this is a lot to do with, you know, modern mining techniques, modern mining equipment. And also the fact that they're better at getting the silver out of the ground now. And so what we saw is an increase, and I believe personally that in 2014, with 26,800 metric tons, I believe that was peak silver. That's my personal opinion on it, but I think that was peak silver. And what we've seen in the last 3 years, we've seen a decline. Now, we haven't seen a massive decline, just from 26,000 down to 25,000. But oil prices have stayed cheap, and this has helped the miners a lot, because diesel fuel, they use an awful lot of diesel fuel to get that silver out of the ground, you know, and that's one of their substantial costs. But I believe that this mining production is probably going to start slumping even faster now, and this is what really supplies the world with silver. If you go to ATMEX and you buy a 1 ounce coin, this mining production, it comes out of the total of mining production. And it seems like every year they're a little bit short. They don't quite cover. There's a little shortfall there. They don't quite cover. The mining production doesn't quite cover the amount of silver that they're using in industry, barring coin demand, and etc. And oftentimes in a year they might be 50 or 100 million ounces short. So that 50 or 100 million ounces has to come out of world inventories that are available for sale. Now, if you notice what I just said, this is where an awful lot of people get confused with silver, is they do not realize that there's a big difference between world inventory that's available for sale and the world inventory of silver. The world inventory of silver is very big. It's like, it's hard to put an exact number on it, but it's probably like billions of ounces, like like 8 or 9 billion ounces or something like that, the world actual inventory. But most of that, it's not available for sale. So why bother talking about it? How much is in the world inventory that's actually available for sale? Most of that comes from mining production. It's like I say, all of the mining production is allocated every year. So when they run over a little bit, say they run 100 million ounces over mining production to satisfy bar and coin demand, say bar and coin demand pick up, then that has to come out of world inventory available for sale. That is a well-guarded secret. Not the world inventory. You can look that up and find out what it is. And it's a big number, and it makes everybody feel, oh, whew, wow, we're not going to have a silver shortage. Because look at the size of the world inventory. But they're all wrong, because that's not available for sale. You got to count the world inventory that is available for sale. How big is that? Nobody knows. It's a well-guarded secret. I can't find out what that number is. Nobody can. That's it's a floating number. It could be extremely small. Maybe these big shots, maybe they know what that number is. Okay? So now, let's take a look now at the gold to silver ratio. And what do we see here? Well, I'll tell you what we see. We see, if we look at this very carefully, we see that at its peak, twice now, it's pretty much touched almost, here it was 97.31, almost touched 100 to 1, and right here, it did touch 100 to 1. It was 100 to, awful close to 100 to 1. Right now, it's on the uptick. Right now, it's past 80 to 1. Okay, so now if we look at this very carefully, we see 3 points in history. Back around March of 1941, it was extremely high. We see, and it didn't stay there very long. Look, it just went up and then come right back down again. Now we see in about September 1990 or so, or November 1990, it was very high again. And what you notice, it went right up to that, and then it receded back again. Okay? And so right now, we see it's heading up into those high numbers again for the third time in history. Only 3 times in history has it really been in this area, this zone. And you notice the last 2 times it did not stay there. Did not stay there. Why do we think it's going to stay there this time? Because you have to understand something about this. If this gold to silver ratio goes back to the mean or the norm, right? You're going to make money off of that, just that very fact, because you're buying it at 80 to 1, and if it goes back to 40 to 1, you've doubled your money right there alone, even if silver doesn't do anything. It's just the gold to silver ratio will double your money for you, right there, right? That's just figuring that gold stays the same lousy price it is right now. And how many of us think that gold's going to move into the future and it's going to stay $1,200 roughly? Do I see a show of hands? Probably hardly anybody who thinks it's actually going to stay there. Of course, it's going to move up with inflation like it's been moving up with inflation all along. It's been keeping up with inflation. And inflation's going to run away like a runaway train. Runaway train, I should say. And so what we're looking at is a gold to silver ratio that's going to go back to the mean. Now, if we look at this chart a little bit more, I figure, looking at this chart, if you take the tops and take the bottoms and you equal it all out, the mean average is right in around 40 here, for going all the way back to like, what, 100 years. The mean average has been, of the gold to silver ratio has been right around 40. Okay, and right now it's 80. So man, are you ever getting a bargain when you buy silver right now? Counting that gold to silver ratio. Now, you notice something else interesting here? 3 times the gold silver ratio went up to around 100. But there's been 3 times when it's dropped below 20 as well. And when it drops below 20, it does exactly the same thing as when it goes up above 100. It touches it, and then it goes back more to the normal again. So what I'm expecting, looking at this and spotting a trend, I'm spotting the trend at around 40-1 gold to silver ratio, and so at the very least, it'll probably revert back to 40-1. Okay. Now I'm going to talk about one other thing here. I'm going to talk about this man, Jim Rogers, and I'm going to run through a little scenario that may or may not happen. Okay? But I kind of got an idea that it might happen from listening to Jim Rogers. He networks with the financial system. He knows a lot of people. He knows what's going on. He knows an awful lot more than probably an awful lot of people you're ever going to meet about the financial system. And he knew back when gold was like 18 bucks, back when it was like 15 bucks, they kept asking him, are you going to buy some more gold? And he said, he was pretty clear with them. Oftentimes he'll hedge himself. He won't really give a straight answer, but this time he's clear. He's clear about this. He says, no, I'm waiting for it to go to 1,000 bucks. Right? Back when it was like 18 bucks. Back when it was 20 bucks. No, I'm waiting for it to go to 1,000. Now, guess what? We're down to 1,200. We're most of the way there to his 1,000 bucks. Now, I'm going to run a little scenario by you. What if he knows something that we don't know? What if the elites of the world are planning to... Now, there's a number out there, like I said, of how much physical silver is available for sale. And maybe that number, because they won't let us know what that number is, maybe that number is dwindling every year. And the rich guys, they would know exactly what that number is. Let's just say it's 400 million ounces. The inventory they have every year that they divvy into a little bit every time they have a shortfall. And so maybe they have a 50 million ounce shortfall this year, and it'll go from 400 million down to 350 million. That small inventory they have, right? Now I'm just guessing. I'm just making this stuff up as I go along. But what if? What if that's the scenario, right? And so maybe these rich guys know when it gets down to, say, under 100 million ounces, maybe they've all decided that they're going to divvy that last 100 million ounces of physical silver up amongst themselves. Clean it all up because they figure it's going to all dry up anyway. And they might as well have what's left, say 100 million ounces. And J.P. Morgan, he's got in there and got his a little bit ahead of time, so he's already got his piece of the pie. Maybe he plans on getting a bit more of the piece of the pie, and maybe with an awful lot more of these other rich guys are going to swoop in, and in the middle of the night when everybody's asleep, you'll see silver spike down. So it'll be up around, say, let's just say it's up around 14 bucks or something, right? And then all of a sudden you're sleeping away in your bed, and in the middle of the night when you're unsuspecting, you can't do anything about it, that silver price will go all the way down to like 10 bucks and stay there for like 5 minutes. And at that price, all of the world's physical inventory available for sale will be sold. Every last ounce. Even what's in the coin stores. Because I'm going to tell you what, with modern technology, even your remote coin stores all have it inventoried to the last ounce. And these guys that are buying physical silver on the market here, what they can do is buy the physical silver and not take paper, not take U.S. dollars in exchange for it. That's what they've been doing all along. They've been buying the paper silver and the contracts, and they've been taking physical dollars in exchange for those contracts. What if, all of a sudden, just when the price swoops way down to like 10 bucks, they swoop in and they say, okay, we don't want the physical paper, we don't want the paper, we don't want to be settled in dollars anymore. We want to be settled in real physical silver. And what they do is then they allocate all of the physical silver that's left in all of these stores. They just basically, it's all up for sale. I mean, when you look at APMEX, you go to APMEX and you go on their page and you see some bars that you like or coins that you like. Those are for sale. You can have them right now if you want them. They're for sale to anybody who's willing to buy them. So if these guys swoop in the middle of the night, they can buy out all of these inventories because these inventories are all linked in by computer. And all of these companies, they're willing to sell, especially if they all know who. Like if say one of these rich guys knows the Atmex guy, and they're all shaking hands together, they can just boom. Call him up on the phone. They got it all. It's gone. The next day you go to the website and you find out that they're not even got the website open. Or if you do go in there, you find that all of the inventory says sold out. Right? So what if the price dropped from $14 to $10 for 1 hour and then they sold out all the silver? You're not going to get any of that $10 silver. But if you buy in a little bit higher price, right now you're going to get any silver you want. Now, this is just a what-if scenario. It's not financial advice or anything. It's just me thinking to myself, hey, you know what? Why has J.P. Morgan got over 100 million ounces of silver put away? And he's got it in vaults, and he's guarding the stuff. Does he really plan on losing money? Do these guys ever lose money? These guys won't touch anything. These really rich guys will not touch anything unless they're going to make 10 times their money back. Seriously. And if J.P. Morgan bought in a lot of that silver that he's accumulated over a long period of time, because he couldn't accumulate it quick, he would have shocked the markets. He's been accumulating it slowly over a long period of time. He's cost averaged just like we cost average. His first silver probably cost more than the silver he's buying now. Just the same as us. If we bought silver back a few years ago, we probably paid $30 an ounce for it. Maybe we still got it. And maybe we're buying still. Maybe we're still buying a bit. And now we're getting it at half the price. What a fire sale. What a great sale. Anyway, this is just a scenario I wanted to run by you guys. Just in case. Because you never know. Wouldn't it be funny if I was right about this? And they planned on, all of, not just Jim Rogers, but a whole slew of them. Maybe 15 of them or 20 of these rich guys planned on, and that are in the know, plan on just swooping in and taking it all. And then after they take it all, then the gold and silver price, gold will shoot up too, not just silver. If we have a real honest-to-God silver shortage in the 1,000-ounce silver bars, you're going to see the silver price take off, and then you'll see gold follow it. But ultimately, if you have a silver shortage, you're going to see this gold-to-silver ratio get slaughtered. Forget the 40 to 1 I was talking about there. It's going to go to more like 20 to 1. And the gold price is not going to stay at $1,200. It's going to shoot up to like $2,500. With a 20 to 1 ratio for silver, something like that, something crazy like that. And that's how J.P. Morgan and these guys make their money. Yeah. So I would say you guys have weathered through this for a long time, and you've been sitting on maybe a bit of silver, you know, and you're thinking now, gee, I want to pay off my credit card or whatever. Don't do it. Don't do it. I know it's tempting. But it might be the sorriest mistake you ever made, because I think that above ground world inventory that's available for resale is getting awfully tight. I don't know what the number is, but I can tell you that the silver that's being used in industry is a tremendous demand coming against mining supply, and we see what's happening to mining supply here. We see it dwindling each year. It's down from 26,800 to 25,000. I wouldn't be surprised if it was 24,000 next year this year in 2018, and next year maybe even like 23,000. That wouldn't surprise me at all. Listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next program. Bye-bye, guys.